Hello, and welcome to the CFA Society San Francisco podcast, where we interview and discuss current topics with leading members of the Bay Area investment community. This week, Tanya Suba Tang, Senior Membership Manager with CFA Society San Francisco, sits down with Jennie Chen, Managing Director for X1 Asset Management. Listen in as they discuss foreign exchange markets.
Hi, Jennie. Good morning. How are you today?
Good. How are you, Tanya?
I'm great. Well, thank you so much for joining me this morning. I'm super excited to have our conversation going.
Thanks so much for having me. Much appreciated.
So, Jennie, you're the Managing Director for X1 Asset Management LLC, and you're very well versed in a Forex market. So that's what we're going to be talking about today. So for our listeners, like myself as well, who might not know, can you share with us what is the Forex market and why should someone like me consider Forex trading?
Well, the foreign exchange market is an over-the-counter marketplace. It determines the exchange rate for global currencies. I think it's by far the largest financial market in the world and is made of a global network of financial centers that transact 24 hours a day. It is also the most liquid of all financial markets, with an estimate about $6.6 trillion average daily trading volume. That is $6.6 trillion per day. In comparison to the Nasdaq stock market, averages about $220 billion per day. And also, in addition, globalization has also played a critical role in growing the Forex market. It has been one of the most persistent themes in recent history, so investors also increasingly sought investment outside of their home countries. That's why Forex market is growing. And by now, I think the Forex market is mostly related to international trades, capital flows between countries, large corporations, central banks, and government agencies. It pretty much effectively models the relative power of countries, their economies, and the flow of money between them. It is also interesting to note, if you look at the TV news, the past 18 months has also shown how much the intervention of central banks can affect the currency market, yet how little they can really control it because the market is just too large for any central bank action to have a long-term effect. But buying foreign currency denominated assets means bringing currency risk into the portfolio because exchange rates can be volatile, at least in the short to medium term. And this can have a dramatic impact on investment returns and risks. Well, if you look at recent quarterly reports from those large international corporations, it will show you how much the fluctuation in the Forex market can affect their bottom line. Therefore, we believe currency matters.
So with X1 Asset Management specializing in the Forex market, can you share with us your strategies, opportunities, and approach when it comes to investing?
Sure. Yeah, X1 is actually a fintech startup specializing in algorithm-based trading of the Forex market. We focus on providing an alternative investment strategy for high net worth individuals, funds, and family offices. Because the Forex market is relatively uncorrelated to the stock market, it makes it an appealing, untapped hedge to the uncertain and volatile times in the stock market, like we are in right now. And a few firms in the market is doing that. Well, specifically for us, we see currency risk is actually a potential source of alpha, and we actively manage it through a quantitative approach. And our approach is quite different from economic fundamental approach, where the classic view is that participants are rational, markets are efficient, and exchange rates are driven by underlying economic conditions. Well, in contrast, technical analysis ignores economic analysis altogether. I think the underlying belief is that we believe the historical price data holds all the information necessary to project the future price movements. The underlying thought is that because many traders have already used external data to generate their trading positions. So in that sense, all the external information has already been priced in. Therefore, from that perspective, it is not necessary to look outside the market to form an opinion on future price movements. This could also mean it's not necessary to examine interest rates, inflation rates, or risk premium differential because exchange rates have already incorporated those factors. Also, when we examine the historical data of Forex market movement, we found that historical pattern in the price data actually have a tendency to repeat. And this kind of repetition provides profitable trading opportunities because broadly speaking, technical analysis can be seen as a kind of study for market psychology and how market participants' emotion can be read from patterns in the price data. And we use that to predict the future price movements. So in a way, we do not really attempt to determine where the market price should be, but rather where they will likely be. That also means we are not trying to time the market perfectly. Nobody can do that, but rather to look for large enough trends and we're getting on and off those trends early enough. So to that end, our algorithms are designed to identify market trends and market turning points in short to medium terms in over 20 major currency crosses like Euro US dollars, JPY US dollars. And we also use visual cues to identify market patterns as well as more quantitative indicators to form a market opinion. And we use that to time position entry and exit points. Also, the benefits of this type of multidimensional analysis is that the market patterns will provide us with a rough forecast of how the market is likely to move. And from that, we can then determine how we should trade it, assuming the forecast is correct. And also I want to point it out is for many people, agree with me that a market actually repeated itself. An interesting aspect of the market is that while it often does the same thing, pattern-wise, it always does it differently. That's why it is a problem for pure mathematical algorithms, because math has no fuzziness built in. Math is precise, but the market is not. That's why we combine mathematical algorithms with AI-based pattern detection, and then utilize a rule-based system to determine the best risk and trading strategy. When we apply this approach to over 20 major currency crosses, it provides with a portfolio effect, which generates a relative consistent equity curve with low drawdowns in both time and the price. I hope that answered your question.
It did. And thank you so much for sharing all that insight and kind of how you use your strategies. So when it comes down to it, how can someone like me start since I'm so new to this?
Well, I'm glad you asked. And I can tell you that I started with zero knowledge in Forex, zero. My first position at X1 was managing the operation side of the business. That is to streamline the process, automate tasks, identify operation inefficiencies, and work on improvements. And over time, I realized that I really needed to have a deeper understanding of the Forex market before I can truly say I made an impact on the business. That's why I started my CFA journey. And as we all know, preparing for the exam was a rigorous and a demanding process. But as a result, I gained an in-depth understanding of investment analysis, financial reporting, portfolio management, and of course, Forex-related global investment perspective. It actually also provides me with lifelong learning and a continuous professional development opportunity through CFA communities like CFA San Francisco. And what I can share with you is that what I like the most about Forex and our approach to Forex is that great idea always wins because the market is unambiguous and unprejudiced. It will tell you black and white whether your strategy stands the test of time. The return you generate for your clients is the single most important measurement, and you really can't hide from that.
Well, thank you so much, Jennie, for sharing your insights with the Forex market. It was great to hear from you and sharing really your knowledge on it. I've never heard of it, or I've rarely heard of it. So thank you for giving us your deep insights to the trading.
Well, thanks again for having me.
I hope to see you soon.
See you soon.
Thank you for listening to this month's episode of the CFA Society San Francisco podcast. We hope you enjoyed the engaging discussion. Join us next month for another new episode.